I see people's name on the screen, so hopefully when you record it, they're gonna show up too.
All right.
Yeah,
Sounds
it's
good.
not your job; it's their job. Their job is to have their name, listed. So, and I can see Ricardo, I can see Abdul, all the other people. So.
All right.
Yeah, you can record this when you hit record. It's gonna record on your computer, on your device.
Yeah, it says recording now.
Okay, wonderful. Okay, good luck, guys.
All right.
Thank you.
So let's just jump right into it. The team discussion for today is the following questions. What is alternative data? How is it collected, generated? Give some examples. And how do prospecting and assetization lead to financialization? So I'll go ahead and kick it off.
Could you repeat that last question for the interpreter?
The question is written, I guess it was a typo, but it says, how do prospecting and assetization lead to financialization? Did you get that?
I think we could type it in. Let me type it in the chat for him.
I will put it in.
I got it. We're good. I got it. We're good.
Okay. So the first question, how is alternative data? Just based off of the machine learning article that she had us read, it says that alternative data can be defined as a vast dynamic category of information that encompasses all things beyond standard data. In this context, in this particular scenario, alternative data contrasts standard financial market data. So some examples of alternative data would be information that you get through website scraping. So whether it's websites, apps, kind of things you find online, you can then gather information. Usually the people gathering this information are like data analysts, scientists, data analysts, people whose job it is to gather this alternative data. Some data types would be like social media feeds, job news, company news, and the potential analysis in the alternative data could be consumer views, trends, and sentiment analysis among social media users.
From that, what I basically got, like I read it and it said, I understood that it's basically data that doesn't come from the usual sources of market information. So like it's kind of valuable for forecasting stock prices, risk management, and market movements, stuff like that.
That's right. So the article kind of goes on to say that with the alternative data, you get what's called upstream fundamentals, which is what you're referring to. And pretty much it's a way to kind of circumvent or get ahead of the market in the sense that you're using real-time data like cash flow or, well, let's go with cash flow, right? Cash flow allows you to see how a business is doing and kind of forecast whether you want to place your bets on that business, invest in that business, instead of having to wait for like quarterly statements and company news or things that end up on financial statements that usually take time to render, as opposed to using the upstream fundamentals and the alternative data.
So basically, what I understand from a layman perspective is it's a data that is not in the scope of standard indicators, right? And an example would be, I think I read it, the pictures, the style pictures of the parking lots of the stores, when they're empty, they can tell that they're gonna have a low quarterly report in sales instead of buying the actual books.
Yeah,
Right.
that's another good point. Another example, like you said, would be like the satellite imagery, the geolocation, and in that sense, you know, just to give a basic example, you look at the parking lot of a business. If it's empty, then you know the business might not be doing too well. Whereas if the parking lot's always packed, just based off the satellite images, the geolocation, you might predict or forecast that the business is thriving, doing well.
Yeah, that's also along the lines of what the professor was like mentioning today with big data, how you can use like social media as well, blogs, YouTube, and sensors. So one thing that I got was for the examples was big tech, sort of how like Apple, Google, Microsoft, whenever you buy a laptop or you get a new phone, there's a lot of data that's always being collected. In the article, they refer to this as surveillance capitalism, because it's like always on, always watching. Yeah, that's another example, an example that I had for data for this analysis.
So what I got is like alternative data can be linked with today's technology. Like we see how high-speed algorithm incorporate alternative data. Like in the article, there is the example, the Associated Press Twitter got hacked and some message was posted for breaking like two explosion in the White House and president got injured. And with a certain time, the market got crashed. So how we can link like how the algorithm and machine learning has a great impact with the alternative data.
That's a good point too.
That's good.
Go ahead. I'm sorry.
I'm sorry. Well, yeah. Basically, yeah. What he said that the algorithm knew before humans that negative tweets were being sent about the. I think it was about the fake news when they hacked the NPR Twitter account and they put that it was a bomb in the White House. And
It's
right
interesting
away
to know
was
like how quickly it's gonna affect. Like
right.
it's like interconnected with each other.
Yeah, well, a tweet could be related to what's called sentiment data, right? So based off this one tweet alone, you know, people on social media, Twitter, Reddit, they might have been at one point, you know, feeling optimistic about the stock, and you know, as soon as they get word of the tweet, whether it's negative or positive, it may change the stock price just based on the sentiment there. There's a quote in the article where like a hedge fund quant was saying something along the lines that they don't think that retail investors are smart, and retail investors being us. So it doesn't really matter whether they say the stock is going up or down. What matters is how many people pay attention to a certain stock, and if a lot of people pay attention, then you bet against them. So they incorporate, you know, the sentiment data and, you know, the alternative data in general into their practices and the way they go about making their investment decisions, for sure.
Yeah.
I think another best example can be we know the Elon Musk tweet about GME, right? So in 1 or 2 hour span,
Yeah.
it went 100 or 200. So it can be related, you know. So that can be alternative data. So one tweet
Absolutely.
in 1 or 2, it went crazy.
All right, let's move on to question 2. It says, how is it collected or generated, and give some examples. Does anyone want to start?
I mentioned the big tech, how you know, the personal data collection is always happening in the background. Another one is analyzing credit card transactions from a sample, and then you sell that information to hedge funds so they can calculate better risks based on that.
And that reflects on like the trends in consumer behaviors.
Yeah.
Let's see.
what I saw
Anyone
was,
else?
yeah. Can you hear me? Okay, so yeah, I saw that assertization and prospecting are two practices that were essential to the extraction and ordering of alternative data. So it defined assertization as on page 2, I think it says um, the contingent transformation of a resource, example data, into capitalized property. So what I get from that is it transforms data sources that were previously of little interest to investment and trading organizations into valuable tradable assets. And prospecting, it says that it's the work of rendering data, I don't know how to pronounce this word, amenable, I think, to engagement with data scientific method. So it probably means like it broadens our understanding of what is relevant and useful data in the financial industry. So like that's what I'm getting, and that's how the assertization and prospecting, like it, that's essential to extraction of alternative data.
Yeah.
So I would like to give the example of like GPS data and sensor data, like how it's gonna affect it day to day. Like we in Ubers and in cars, we use the GPS in plane and in cargo ship. Like it's been a part of life, like that.
So when Kenyon asks how it's collected, uh, I guess it's collected the same as all the data. I guess. It's just how they use it what makes it different.
That's a good point to make. Yeah, because the data is always being produced as we speak, as we move.
Right.
Yeah.
With online scraping, there's caches and cookies. With transactions, there's credit card statements. So again, like you guys said, it's always being collected. There's people that their careers focus on data collection, cleaning the data to make it processable. Where once data was unorganized and unstructured, they clean it and make it nice and neat for the big firms, such funds, to kind of incorporate it into their investment strategies. It's kind of become
like the
right.
package.
Right. Yeah, they create these data sets for them, and I think in the article it mentioned that it's become kind of a hand-in-hand thing, and almost like a reoccurring transaction between the analytic firms and the hedge funds and the big investment firms, like IBM. IBM is one firm that focuses on analytics, and they have all sorts of ways of collecting data, and that's what they do. Not only collect it, but make it usable data, and sell off the data sets to the hedge funds.
Yeah. Something to add for the social media is that they look at mainly like three things: how people view the stock, how people are trading that stock, and also how people feel about the company generally. And they even go as far as to like get as much information out of it. So like on page 9, it says you can make various measures of positive statements, not just like good or bad, a tweet, for example. So someone saying Apple went up $5 on the open, they're having a good day. That's a good statement. But someone saying Apple broke through a resistance level right after the open, it is going to run to this level. I bought 500 shares. So someone's giving you way more information in that second tweet. And so they're able to extract more and put greater value on those type of tweets. It's not just good and bad, but like how useful is it?
Yeah, they trade based on sentiment. So if somebody's really high on the stock, or for whatever reason, there's a popular stock ticker, GameStop, they shorted GameStop. They try to pulverize GameStop rather, to $4 a share, and the stock blew up, based off of sentiment. So in that case, the hedge funds and the short sellers ended up actually losing. And I think I read that Melvin Capital, which was a big firm. They were shorting and betting against GameStop, betting that they would go bankrupt, and you know, it turned out that they were wrong, and they had to be bailed out by other institutions to the tune of like $3 billion. So
Wow.
that was one example that I saw where, you know, like the
Well, that was
big
that was
investment
in
firms.
sorry,
What was that?
sorry, Kevin, go ahead. No, go ahead, go ahead.
I was gonna say, I think the big investment firms, like the article states, that they have all sort of advantages over small retail investors, like, you know, us ordinary people. But it doesn't necessarily mean that their algorithms and their data, their investment strategies rather, are always right. And, you know, GameStop being an example of where they ended up taking a loss, betting against the average investor.
But is
Yeah,
it-
about the GameStop example that you gave, that all started with the Reddit trend, and
Yeah,
yeah, and then that Robinhood putting limits on buying just because they wanted to stick it up the shorters. So that's the sample of sentiment.
that's
I'm
correct.
getting more
Yep.
sentimental than that.
then
Yeah,
they
when
got back.
Robinhood they turned the buy button off, you know, it made big news, and it was a controversial topic as to why, you know, like hedge funds and big firms get bailed out in cases where, you know, they lose on their bets.
Yeah, and like I read in the article, like the hedge fund and investment firm invest lots of money to collect the data from the like NYSE or or Nasdaq or any other stock exchange.
Could you repeat that? I'm sorry, I didn't quite get that.
Like the hedge fund and the other investment firms spend like lots of money to collect the data from the like stock exchanges. That's where they got the data from, like, and they can know like where
Yeah.
to invest, what to do next.
Yeah, they work hand in hand. The article states that there's like a direct relation between them and the data analytic firms like IBM, that, you know, they gather the data, make it nice and neat for them, and
Yeah, because they will
I
not
guess.
have data by themselves, so they have to buy it from other vendors.
Yeah,
Yeah.
yeah.
They also. Yeah, they
I'm sorry,
also.
go ahead.
No, yeah, I just want to that they also don't want to spend the work on reading all those tweets and trying to make sense of that. So they have these like you mentioned, those specialized companies that focus just on that, trying to extract as
Yeah.
much useful information out of alternative data.
It's as simple as saying, you know, like, somebody's got to do it, right? The hedge funds, they're in charge of making the investments and coming up with these strategies, but somebody's got to get a hold of this data and like make it presentable for them to come up with their investment strategies and make their investment decisions.
The big
So
market
let's move
for
on
this.
to,
I didn't know it was so popular.
what was that again? I'm sorry.
It's a big market for this. I didn't know that it was so popular.
Yeah. And I mean, think about all the data that there is to collect and extract and then process and turn into usable data sets. I mean, it happens by the second. You know, people tweet by the second, people post by the second. Geolocations, credit card transactions, that kind of thing is always happening in real time. So they need, you know, a wide array of options as far as collecting data goes. So the third question is, how do prospecting and assetization lead to financialization? If anyone wants to tackle that one.
I think the financialization is to make money out of it, right? So the fact that they have to present it in a way that is sellable, and they can organize it in a way that is appealing to the buyer. That's prospecting. Prospecting is like packaging, converting to an asset, and then lead into the sale. Yeah, that's my take.
Yeah.
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 It looks like we're getting ready to close, guys. I appreciate y'all. for
Yeah, just-
participating.
Thank you, Kenny.
You guys are great. Yeah, that's pretty much it. I see the definition for financialization is using data appropriation. It relates to finance's influence over the economy and blurs the line between financial, economic, and social realms. So financialization seems like a term used to encompass, just a wide array of things when it comes to datification.
All right. Good night, y'all.
All right, thank you.
Later.
Thank you.
This meeting